Hey investors, April was a good month for Project 1 million. Our portfolio reached new highs. The first few days of May have been a bit of a roller coaster though, and I've also noticed that I've used that word roller coaster a few times already this year. But I'm still very confident about the companies we own, and in fact, many of these companies had very good earnings during the last quarter. My top three holdings for the last 2 years, Amazon, Facebook, and Google, have all done very well. They are knocking it out of the park right now. So there may be some short-term volatility, but these are super companies and I expect them to continue to do well. Let's take a look at the full portfolio and the breakdown of the results. So this is the portfolio breakdown. Our top three positions, Amazon, Google, and Facebook, make up about 45% of the portfolio. This has always been a very heavily concentrated portfolio. But in recent months, I've been trying to diversify away from these three core positions. So although these stocks have been going up and that makes them an even bigger part of the portfolio, in terms of the new stocks I've been buying other stocks. That's not because I have any less confidence in these three holdings, but it's because I'm trying to diversify a little away from these core positions to other companies. So in a bit, we'll take a look at some of the other stocks I have been buying. Beyond the top three positions, my top 14 positions make up nearly 80% of the portfolio. So as you can see, this is a concentrated portfolio and we try to focus on our best ideas. I think a lot of these companies still have very good prospects like Integrity Surgical and even Alibaba despite the short-term volatility we have seen with it. MasterCard as well. Upwork and Trilio were great outperformers last year and that's why they have such a outsized position in the portfolio currently. But they are still good businesses and I don't mind holding them at the current weightage. PayPal I think is another great business and so is Adobe. I think Autodesk also has potential. So I've divided this portfolio into green, which represents the core positions, blue, the secondary positions, and beige, which are the more speculative positions. So in terms of the promising positions in the blue portion of the portfolio, I am looking to add more to companies like Teladoc, Microsoft, Baozun, DocuSign, and Illumina. I think these companies have good long-term prospects and they're decently valued for the most part. You can see I've recently bought Shopify. For the longest time, I've always avoided buying Shopify because I thought it was too expensive. But I finally took the plunge and bought one share of Shopify. This gives me skin in the game. I am more motivated to understand the business better and follow the price movements better. And it's also made me into a fan of Shopify. So I'm always rooting for it now. I'm not that optimistic about the price appreciation from here, but I could be wrong. But if it falls 20-30%, I might buy more into Shopify. So now let's go into the more exciting part of the portfolio, which is the speculative part. Before that, I think I should mention that Nvidia is also another position that I'm hoping to increase in this portfolio. I'm also excited about BYD, which I just recently bought. So in terms of the speculative positions, you can see them over here. I think here the ones I'm excited about are CrowdStrike, Unity, even Intel to an extent because it's so cheap. Bitcoin not so much, but I am excited about Ethereum. I haven't bought into Ethereum yet for this portfolio, but I do have it in my eToro fund. These are the other positions. I'm also researching more into PacBio. Long read sequencing is something that is touted by ARK Invest especially as being much more better than short read sequencing. And Illumina is the leader in short read sequencing, but PacBio seems to be the leader in long read sequencing. So I'm trying to study it more to understand if PacBio is really going to be the next Illumina. I'm also interested in Roblox. I think it's an interesting platform. This stock is called Nano X Imaging, and they're producing uh, much cheaper X-ray machines. I'm excited for this stock because recently it got the FDA clearance for its products. So from being just a proof of concept, it's gone into a full-fledged approved product now, and they can start commercializing it. I think X-rays are in general too expensive, so I definitely like to see some disruption in that space. So I think this is a speculative bet that holds a lot of promise. I'm also quite interested in eToro. This is the SPAC vehicle that is bought into eToro. Um, I think eToro has a good future. I'm part of the eToro family, you could say, because I'm a popular investor there and I have my fund there. So I get to see firsthand the dynamics of the business, and I think I understand it quite well. And I think it's a broker with a difference. Um, there, I don't generally invest in brokers because I think there's a general race to zero in terms of commissions. But eToro is one broker that has a difference in terms of the great investors on the platform. So I am definitely interested in this. I'm just trying to understand the mechanics of the SPAC investment better before I put in more money into this position. And I want to understand if I'm getting a good deal through this SPAC that I buy into, or should I wait till the merger is complete. Another one I'm looking out for is 23andMe. It's quite an interesting company to me. I think it's fallen quite a bit as well, so I'm going to keep a close eye on this one. There seems to be a lot of excitement and hype about Palantir, so I mean, I have a few shares here just to be part of that excitement and hype, and also to make me motivated to understand the company better. These are the other positions we have here. I'm also learning about Skills, which is like an esports platform. I find it interesting, and I generally like platform companies. So this is one I'm keeping an eye out on. So you can see our cash is right now negative 1,700. This is because I bought the Shopify position and a few other positions, I think, including Teladoc, and I didn't have the cash, so I'm going to probably sell some booking holding to make up for that. So in total, we have about 331,000 plus. And you can see our performance year to date is about 8%. This is excluding the leverage. I think it's a pretty decent performance. I think we are beating most of the top fund managers, and I think we are even beating the indices. So this is what I've been up to in April. We bought some of the eToro position. We bought this put on Triple Q. We bought Skills, Tesla. I think buying these puts have been a waste of money. Initially, I thought buying puts would help provide some downside protection, but I don't think they're worthwhile anymore. Actually, I think the best protection really is to sell those puts when the market falls a lot. So I sold one Upwork share here. I bought QuantumScape, one of those speculative positions. You can see some of the puts here. Bought During I think the last round of falls in the stock prices, I bought Pinterest, I bought iRobot, Teladoc, Shopify, Amwell, and yesterday I bought some BYD. So in terms of the open option contracts that we have, you can see them on the screen. I think we're not over leveraged at the moment. If I needed to buy back all these put options, I will need to spend 2,400, which I think we can easily cover. So I think if the market falls further, I'll be selling more put options. Probably on stocks like Amrel, Teladoc, and if there are other opportunities, I'll look at them as well. I try to stay quite disciplined because you can get quite tempting to sell a lot of put options when prices fall big. But I mean, so a stock like ML has fallen like 70%. So we got to be careful because it could fall another 15-20% easily. So I think I'll probably be patient and disciplined with the put options. So finally, let's take a look at how our fund compares against the best funds and indices around the world. So we usually compare against S&P 500, Triple Q, ARK Invest, Scottish Mortgage Investment Trust, Berkshire Focus Fund, and the Barron Fifth Avenue Growth Fund. So right now we're doing not too bad. We're actually beating most of the funds. We're beating ARK Invest. ARK Invest is down about 6%. Berkshire Focus Fund is down about 5% plus. Scottish Mortgage Investment Trust is about 1% plus. The Barron Fifth Avenue is doing not too bad, 6%. Triple Q is about 8% plus. So we're about level with the Triple Q. And we're only losing out to the S&P 500, which is doing about 12%. But the S&P 500 didn't do so well last year, so I think it's only making up for some of the underperformance from last year. So overall, I think we're doing quite good. But we never get complacent. We always look out for better ideas. We're investing our own money, so we want to grow it as much as possible. So let me know your comments on my portfolio down below. Hit that like button, help spread the message, and I'll see you in the next video.